What's up, everyone? I would like to go over the trades for review, and the first review is about this idea. So we have a Bitcoin 1 hour chart, and I think you marked out a support line or area, and you would like to long this, and I will tell you why this is a bad idea. So I think you marked out this one. I don't trade support and resistance, but something I can say is that this would not be a great area for entry, because the first problem is where to put your stop. So in the screenshot you put your stop right there, but the market always creates liquidity, takes liquidity, and then distributes. So the market creates liquidity right here to sweep it and then go higher. So for example, if you long this right here and put your stops right here, you always want to put your stop at the level where your trade would be invalid. So if you long this and put your stops right here, the trade wouldn't be invalid if price goes there. As you can see, price just took out the liquidity right here. So it built up liquidity, then took it out to go higher. So this would not be a good idea, because when you put your stop right here, your trade wouldn't be invalidated if price goes down there. So this would be the first trade. Me and Basti, we have a different view. We trade somewhat different. So I'll make a video to explain my view, and he explained his view already. But yes. So this would be your next trade. Also, your stop isn't at an area where the trade would be invalid. There are a couple of things where your trade would be invalid. So you always want to put your stop at a invalidation level. So now you're asking, what are invalidation levels? One invalidation level would be a strong low or a strong high. Now you're asking, what is a strong high or low? Strong high or low, it's just a low. So this is a low here, right here. A strong low would be this. Why? Because it took out a weak low. So this is a weak low. Why? Because it didn't took out liquidity. A strong low is a low which took out liquidity. So at every high and low rests liquidity. So market created the low, the weak low, because it didn't sweep out any liquidity. So let's say this would be another low. As you can see, the market didn't take out, as we came down here, it didn't take out this low. So it made a higher low. So this means this would be a weak low because it didn't take out liquidity. And here also, price didn't take out any liquidity, so this is a weak low. So now price trades down into this low and into this low. So this is a weak low, strong low. And this is always an area where you can put your stop. So if price forms a BPR right here. Or wait, if you want to long this, you can long it after change in order flow and put your stops here at the strong low, because this would be an invalidation. But the strong low gets confirmed after we get the change in order flow. So I said many things, and I recommend that you watch the video again, but it's better for you to put your stop always below a strong low. So this would be a weak low, this would be a weak low, and this would be a strong low, because it took out liquidity. And even better, if you want to long this, and price created a BPR right here, so we have a gap right here and another gap overlapping this gap, this would be a BPR. You can put your stop, if you long right here, you can then put your stop below the BPR, and you don't need to put your stop all the way to the low, and put your stop right here to the BPR end, and then you can aim for a better risk reward ratio. So you always want to put your stop at an invalidation level. One invalidation level would be a strong low. Another invalidation level would be a balanced price range. With a strong low or high beneath or above. So this would be an invalidation level. I get you an example. So right here on the 4-hour chart, price built up this range and then swept it out. Okay, this shit I wouldn't long because it's at mid-range, but this one is better. So we have a long right here, it's just consolidating above this low and below this high. Now it finally took out this low, so this would be a strong low. So if you would long, you wait after we get a change in order flow. This would be a close above this order block, and then we get a close above with this candle right here, and then the fair value gap forms right here. You can take your entry at this fair value gap and put your stop where? I'll show you. This would be the BPR, because we have this gap, this small gap right here, and another gap overlapping this gap, and you can put your stops right here below the BPR, and you don't have to put your stop below the strong low, so you have a better risk reward ratio. So after the change in order flow at the fair value gap, you enter, and you can take your first partial at those equal highs. So this would be the same, no invalidation level, price can easily sweep out this low and then go higher, or take your stop and then go, yes, higher. So also this is just a random support and resistance broken, and also no invalidation right here. Yes, and as you can see, you post 1 trade, 2 trades, 3 trades in. This might be also a psychological problem. So this would be a question to Bastian, but I can answer too. I have also a rule for when I put my stop at break even. You don't have to copy this, but this would be my idea, or my plan says I have to put my stop to break even if price trades to the first invalidation level. So what does that mean? For example, we took this trade here, put our stops right here. So, and now price goes to our first invalidation level. What are invalidation levels? Here, it is liquidity and PD arrays. What are PD arrays? We have a model about PD arrays like order block, fair gap, breaker block. You can read that. But if price takes liquidity, this would be the first invalidation level. So we take out this high, and now I have to put my stop to break even, because price can easily reverse after taking out those highs. Like, price took out those lows and reversed, and price can easily take out these highs and reverse. So I have to put my stops to break even after we take out those highs, and then I can let the rest run. And those are my rules for putting my stop to break even. I hope you learned something, and watch it again because I said so many things. And yes,